Today I'm closing my short position in Apple, 394 and 60 cents entirely, since I'm quite happy with the profits made on the short side, since my alert at $453, 1% accuracy, betting on once again the resume of the crash in Apple below $400. We did it today, and finally I quit on the short side in Apple. Bear in mind that during this process it has been extremely important to bet on Apple crash, since the rating strong sell above 677 all the way up to 705, precisely the top in Apple. Then upgrade the stock to strong buy in April for the first time in the past 8 months, recommending to buy the stock after closing short positions at 386.5. That was the bottom. You saw a very important rally, probably the most important in fact in terms of percentage in the past 8 months. The stock rallied to $460. My target, it was the 463. I mentioned it here. Therefore, then you saw a pullback on the price to 420 and a bounce. That bounce to 453, I warned you to take profits on the long side. To go short, the stock will likely go below $400. Here you have the stock well below $400. And now you cover the short position in Apple, and you can use then the profits elsewhere in other stocks, since capital rotation is rather important. So again, I repeat, it's not necessary to trade or to have a short position through earnings in Apple. I've been very clear about the major direction of trading in Apple going forward. And in terms of also fundamentals, the stock is not a strong sell. It was a strong sell a long time ago in 2012. So we expected this, again I repeat, very important to lock profits on a short-term basis. Once we got confirmation the stock will not break 453, betting on the short side all the way down to 394 and 60 cents today, and closing entirely short positions in Apple, and then using the profits elsewhere. And if you wish, you also can reverse to the long side in Apple. That is up to you, but bear in mind if your interest is to acquire a long position in Apple, you have to consider how much you consider that eventually you can do in Apple, because I have been explaining for almost 1 year that there are huge losers in Apple, namely the fund manager David Hehorn, who I consider one of the scams in the stock market, not only by luring investors to sell short stocks like Green Mountain Coffee, stocks that they rallied 300%, as well as to buy and to keep buying stocks like Apple during a crash. So these individuals, obviously, while they don't capitulate, you will not see Apple probably making a very strong rally. Moreover, so you have to think, if you buy the stock, you have, in first place, I have been very clear about this, if you want to buy the stock Apple, you had to bet on the crash, you had to make the most on the crash. I even explained this in stocks like Groupon, Pandora Medias, and so on and so on. In the first place, I repeat, you had to bet on the crash, and only after you bet on the crash and make the most on the short side, you could then buy the stock with a percentage of the profits made, and obviously also participating in the bull market in Apple, which I defended for several years, since the bottom $238 in 2010. So that was very important. These rules are very important, because if you then do not obey to the rules, and if you are just, for example, let's say that you are acquiring here a long position in Apple and you didn't participate in the crash, so you are a complete fool, because you missed millions of dollars in profits on the short side. I already in fact repeated this and explained in April, when I recommended to buy the stock at 386.5, I explained and I repeat very well that to buy the stock there, and I defended a very large amount, so a very large return in terms of the long side from 386.5 to 463, but also explaining that this recent sell-off in Apple that was worked out here, so very important with absolute accuracy in terms of all these pivots that I identified and I created, helping you to make the most. But again, I repeat that you are allowed to buy Apple, but to buy Apple you had to make the most on the short side, because the principles, the philosophy is always the same. You bet on the crash, and only after the crash you are then allowed to start building a long position when everyone else starts selling the stock. And obviously there is no confirmation whatsoever, I'm going to repeat, in the short term and mid term. So far there is no confirmation whatsoever that this recent bottom in Apple in April, the 386.5, can be an ultimate bottom. I already also addressed this in April, that no one could, including myself, so I made that call, and that was extraordinarily important, but there is no confirmation whatsoever that the 386.5 it is ultimate bottom, because there are several trigger events going forward, including earnings that and also fund managers capitulating and selling shares at very high speed price, including probably that individual David Hayhorn that is continues to losing hundreds of millions in dollars, not only by remaining long the stock during a crash, but also betting in gold on long side. You know that gold crashed. So I think is rather important for you to have a very clear understanding of this process, because is one of these individuals decides to sell shares, and since they are having or holding on to so many shares, nothing is guaranteed that 386.5 can remain a ultimate bottom. So if you are interested to buy, I think it is obviously preferable, in my personal view, that you wait for a reference price, that you probably wait also maybe, if you wish, for earnings, and you should only buy a stock once you see confirmation of volume on the long side, that is buying interest. And the reason why I'm quitting the short side in Apple at this point, even if it is not the low, is very simple. Is in terms of technicals that you follow and with me, and although I don't make decisions based on technicals, is that I'm pretty happy with the profits made in Apple on a short-term basis. The stock fell more than $60, and this is amazing, extraordinary. In just a matter of 3 weeks, it killed all the individuals who remained long the stock. Obviously, again, I repeat that the key point, like in Google a few years ago when I upgraded the stock to strong buy at 478, Google, everyone now wants the stock because it is now at $900, but obviously the stock is not now a strong buy. The stock was a strong buy when I upgraded it at 478. You had to see the crash or the stock selling off. You will remember Google, $600 all the way down to 478, and then only then I repeat again, because I keep repeating the same, you invest in Google. It is a great company and it was a great price, right? So in Apple you were obviously the most interested, as well as in many other stocks, you were the most interested part in the crash, in having this crash in Apple all the way down to that 386.5. And having said this, I think today, don't forget the huge achievement that we made in Groupon, calling the bottom last year in November 2012, and once again this is the same situation, betting on the crash in Groupon since IPO, quitting the short side between $6 to more or less $5, so average price around 5.5, and then recommending to buy on climax selling in November 2012, Groupon at $2.79 to $3, upgrading for the first time the stock to strong buy, with a very clear upside eventually that I didn't know if the stock would do it in back then in November 2012, but it was the $8.50 to $9, and you have here Groupon, which chart you have. I can show you this chart in Groupon, and just for you to have a clear understanding, just for you to remember, 9 months since the climax selling in November. So Groupon, basically the chart is this one. If you want to know, this is the chart I've been sharing with you. So Groupon, you can take profits in Groupon any point. I'm not here to manage your portfolio. The stock, in my opinion, was a strong buy, precisely after capitulation, entirely capitulation at $2.79 to $3. And then the stock, obviously took several months for the stock to get to $8.50, eventually $9. But you should then, I think, take profits in Groupon. I think that the $2.79 to $3, it is eventually a long-term bottom in Groupon. That's what I said, and why I upgraded the stock to strong buy. So in all these cases, including Apple, the objective, it was to bet on the crash, participating also in the bull market. And then, if you believe that the stock one day can, rally significantly, then you should take profits on the short side and start buying the stock slowly, okay? But not going, 1% on margin, unless you have, extraordinary profits that, in fact, you have all the responsibility to have, because, your risk is zero. But if you want to reduce your risk in Apple and in the market, you see that I'm taking profits on the short side, precisely when the relative strength index is falling now to oversold levels, and also the other indicators on balance volume and accumulation distribution. It does not mean, I repeat, that the stock or the share price cannot continue moving lower, because it can, for those reasons that I mentioned before. But if you are interested to buy the stock, I think you should start slowly after I cover the short position, and also using or letting or available capital for after earnings, because this quarter, as I addressed in the last in April, I don't expect much. So if you have a surprise to the upside, better, but I don't expect much. But at this point also, I'm not short anymore Apple, and I already told you that I would signal and address all the turning points in Apple, when to close long positions or when to take profits on long positions, when to take profits on short positions, also addressing the short-term trading, the mid-term trading, and long-term trading. Therefore, everything has been here described with an accuracy 100% every single day, telling you what I expected for the high of the day, the low of the day. So I think my work in Apple is done, at least until earnings announcement. I'm out on the short side, and I wish you very good luck. And bear in mind that now you can use a substantial amount of these profits made in Apple also in other stocks. There are stocks that, in my perspective, they are rather overvalued, and you should start there creating or building short positions. Stocks that they trade, stocks that meanwhile Wall Street has been upgrading, raising targets, and it should be precise on those stocks that I discuss also in the service, where you should then turn bearish or start selling positions on the long side and then reversing to the short side. Also, don't forget that during the course of 2013, it was extremely important. You see that Apple, where everyone was betting on the bull market in Apple with obviously targets that they didn't make sense at all. The 1,111 that I addressed here hundreds of times explaining how that was a huge scam. And Hewlett Packard, precisely in November, when you cover the short positions, and once again, I repeat, the philosophy and the principle was the same, betting on the crash in Hewlett Packard, and then buying the stock, or covering the stock, better saying, at the bottom, and precisely at the bottom, then buying the stock with a very clear upside, given here $26, and the stock in June 2014, the stock traded basically to $26 and then gave back obviously to 23, but that should not constitute a surprise. Very important during this entire process, it has been the guidelines on the ETFs. So all these ETFs, like the housing market, which vision I shared with you already last year in 2011, where how this would trade. The financials, that they represented a huge amount of profits here since November 2012, so a huge rally in financials up to my alert 72.5 in May, the third week of May, with a very important impact. The financials then sold off all the way down to almost $55. That is obviously the ETF. And also the alerts, the recommendations to take profits, or some profits at least, obviously at 74.5 in the Qs, trimming their long positions. And then you see the impact that my alert had when the ETF, also with financials and the others, they sold off all the way down almost to 69. See, this sell-off is a direct result of all those alerts. In my perspective, the market was overbought. And also the Fed announcement that part of this rally, or a great part of this rally, is obviously direct responsibility of the central banks. And if you don't have the central banks there, you know that this market in the US is a market. I'm not going to use adjectives, but you know what my opinion is. This is very nice. It has been very nice, but this is an illusion, because great part of this, and including this Tesla Motors that I already also addressed, where to buy, where it was the strong buy rating in Tesla. And for example, the best trader in the world, that is Jim Cramer in the US, that he has a herd of investors following Jim Cramer, that is the best trader in the world. He considered Tesla a short at IPO prices. So, I mean, everyone knows this. The individual, when Tesla Motors, it was in fact a great buy, or the best buy, or a strong buy. Now he considers Tesla Motors a strong buy, and and this is amazing, but this is on the books. I mean, you go on internet, you call CNBC, and these guys are on TV. I mean, it's Jim Cramer, David Kayhorn, Jim Rosers, all these guys, Mark Fabers, and all these guys are there smiling on TV. On the left hand side you have CNN, on the right hand side you have Fox News, and they have the privilege to have these individuals telling investors what to do, and obviously precisely the opposite to what they in fact should have been doing in order to make millions of dollars in profits. But of course, and that is I'm very happy, no one knows me, and that is the key point, or the key advantage precisely here, is you have to be out of these individuals. You have to be precisely doing the opposite of these great losers, because I mean, I'm very proud to be the worst trader in the world. I'm the worst investor in the world, precisely because I make the opposite of all these great investors in the world. Jim Rogers, betting on the gold going to 2,000 or 3,000 an ounce. And the gold crashes, and the guy keeps adding and recommending to add. The commodity is the same situation, the guy the same. And if you are a small investor, you are completely bankrupt. The same if you bought Apple, and with you have the chart here. I think it's rather important to repeat and to keep showing you this chart, because if you bought this stock, if you invested in Apple, and if you kept adding to the long side in Apple, while these guys, they review a target to upside, and bear in mind they only decided to downgrade Apple once the stock started selling off to $500 in December 2012. And even when they downgraded Apple, my friends, even when they downgraded Apple, they maintained upsides at $850 plus. Okay, so if you are downgrading a stock at $500, but if you have an upside $850, I mean, you are where you are downgrading. This is all a scam. You understand? This is a game, is a scam where these individuals, obviously they don't know anything about investing or trading. They were selling ideas, and I already explained this. I mean, 1,000 times. You have more than 2,000 videos online where I explain step by step all the process in all these stocks. What you had to do, it was precisely to invest in companies where everyone was short, including these individuals in Wall Street, like the case in Netflix, and they were caught short. And because they were caught short, Netflix today trades at $200 plus because they were short the stock. Everyone, for them, Netflix was then a strong sell and a dog, in fact, and it is precisely when Netflix was a strong buy, because Netflix was in fact a strong sell when the best trader in the world, the best investor in the world, Jim Cramer, at $298, you all remember, he was saying that Netflix could go up to $400. So what you have to do is precisely the opposite of the great investors in the world. Those that are on TV, these scams like Jim Rogers, Mark Faber, David Highhorn, these guys that they appear on TV, they call themselves billionaires. I mean, all these scams are there. All the analysts that Gene Monster calling Apple to $900, the Apple TV, and all these stories, that they have no impact whatsoever on share price, because the share price, the share price is not going to be a direct result of these guys. Once there are no suckers to buy the stock, or any stock, and I'm not talking about Apple, it can happen also to Netflix if they start upgrading again, and you already know the story. It's precisely when they start upgrading that then you have to bail out, you have to sell to them, and then if they make some profits on the upside, it's up to them, but you have to sell when they start to raise and to become mad about the darlings, precisely buying the stock when no one wants it, and then selling when everyone wants the stock. And here you have the chart in Apple. You see this is a bear market in Apple, a crash. Is a crash because this was the number one company in the world. You bet and you participated in the process of Apple becoming the number one company in the world. The crash in Apple is not related to Steve Jobs and all those, what you read on the internet is a complete scam. They have no fucking idea, in fact, why Apple crashed, or it has been selling. In fact, these individuals, the more noise, the more pollution you have on the internet, in fact, it is better, because, all these newsletters like the Motley Fool and Zacks Investment Research, and, of course, today you don't see any of them saying that, Apple was, but in 2011 or in 2000, they were there saying, the next Apple, we have been in Apple and so on, but, recently, they disappeared, these guys, they disappeared, but they still left traces over there on the internet that they were recommending to buy these stocks, and calling in fact the bottom in Apple at $550, and you all know why. And if you bought the stock or the most at $550, that in fact they were already recommended to be long, then you capitulated, you lost all your money. So you have to be extraordinarily careful and precisely do the opposite of all these guys, because have you seen real buyers in Apple? The answer is no. You have not seen real buyers buy to hold in Apple. So why the fuck would I buy the stock to hold if I have not seen, for 9 consecutive months, I have not seen any buyers on the stock? So why would I buy the fucking stock to hold? If you see on the volumes, if you the news, the earnings, all the stuff discussed here, if you never seen, because the recent rally in April, it was very good, but it was a short-term rally within a clear downtrend in place, where I already addressed where is the resistance. Today, for example, there are analysts, they have targets or upsides $460. Okay, but if the stock rallies 400 to 460, that is $60 gain, basically, again going back to 460. And then what? That is basically 10% or so, or whatever, 15%. But there are stocks in the market where you make 10% in one day. I mean, there are stocks in the market when you make 10%, or in a couple of days, or, in 1 week. So why are you going to buy Apple? That is one of the questions they have to do. Or do you believe that Apple is going to be a $700 or $1,000 or $2,000 stock in the future? Because if that is your belief, that is different, you see. But before you invest in Apple or in any other stock, you had to make the most on the short side, making millions of dollars, and you had to participate in the bull market, and then you had to participate in the bear market, but not, buying the stock and then keep buying, because then you find many stories on the internet why these individuals, they, even if they had gains like 500%, the more greedy they become, the more they buy, their position size becomes so large that, then a bear market in Apple like this one kills all of them, and then in the end they don't know where it is in fact Apple is a buy or it is a sell. And that is precisely what you want, is precisely what we want, is them, the investors, the retailers and the institutions, to be confused. You understand? Because that is the key point, is the advantage. Because that is when it is the answer to the $1 billion question is what is Apple going to do next, right? But the principles that have been described here, you had to make the most on the short side in Apple always, because that is the important. Okay, that was the important. It is not on Apple only, it is in the other stocks like the Crow Pound, any other stock that I've been discussing here. It was the key point. I always addressed it, even in speculative plays, the blackberries, any stock I discussed here. Best Buy, for example, I announced the button in my perspective at $11.50, precisely when that great investor in the world, Jim Cramer, he was telling investors to get out of Best Buy. You all remember this. So in my perspective, Best Buy at that point, at that price, it was a good buy. Today, the stock is trading basically at $28. In my opinion, it is not a good buy. It was a good buy, at $11.50, but at 28, you need suckers. Maybe it can go to 30, maybe it can go to 35, $40, whatever. Then is Wall Street, is their games, it's not my game, you understand? But at $11.50 is a good buy, but not at 28. I mean, this is simple. You understand? This is not about Best Buy or Apples. This is simple. This is very simple. We'll do the opposite of these great investors in the world. And speaking about Cramer, you also had in fact, I addressed this before. I mean, let's see some pics of the great investor in the world, Cramer. When he recommended to buy, he was bullish about SodaStream. We were betting here, and there is a case study published about betting on the collapse in SodaStream. And my target, it was $29.70. So the stock traded all the way down to $29.70, and I only upgraded SodaStream at $29.70. That, once again, if you wanted to invest in SodaStream, it was at $30 or below, you see. And recently, SodaStream, rallied to $70 again, you see. And during this process, the great investor in the world, Jim Cramer, doesn't like it, you see. He didn't like it. I mean, he liked it in 2011, but, recently, probably now, the guy already likes it. But, in November, October, at $35, the guy didn't like, okay? And obviously, short covering, it helped in this process. I mean, in October last year, I had a target or upside on the stock 52. I mean, but, the stock, the short squeeze and the recent market conditions, it helped to get there to 72 again. I mean, are you going now to buy, SodaStream at 72? Of course not. You need suckers. The stock was, in fact, a strong buy, not even at 52. It was, below the $30 that I called it, you see. So now you are selling SodaStream to Jim Cramer, the great investor in the world. You understand? That is precisely what you have to do. This is extraordinarily important, that you use these great investors in the world, that they are on CNN, they are on Fox News, CNBC, they have paid channels, they have newsletters, they have millions of followers, and people do follow them. You see, the people do follow them. I mean, I don't have a newsletter. I don't want with 1 million or 2 million subscribers. I mean, it will be completely mad. You understand? I want these guys to have 1 million followers, 1 million users, or 2 million, or the more they have, the more it is, the better it is. And then why? Because we are going to do precisely what the opposite of these guys. We are going to pick some, to use some of their picks, like the case in SodaStream, like the case in Cree. Cree is a terrific example. In 2011, in fact 2010, when the stock was trading at $80, Jim Cramer, the great investor in the world, was not calling this stock to go, to melt all the way down, and this stock was one of the best shorts in the market, and with a very steep downside. So I already addressed it that once it fell below $27, I upgraded the stock, I quit the short side, and I told you, then you can invest, you buy Cree. And this was 2 years ago, in 2011, after the crash. So they crash, and then you invest. You made the most on the crash, and then you close the short, you start buying the stock, and again, 2 years later, you have the stock at $62. And now probably Kramer likes it. Why? Because he's the best investor in the world. He has 1 million or 2 million followers. He's on CNBC, left-hand side, and on right-hand side, Fox News or whatever, or CNN, and all these guys are there. David Hayhorn, Gene Rogers smiling, and Mark Faber calling a doomsday scenario every single day or every single week. One day is going to be right. And don't forget about this extraordinary example of these guys, how they don't know anything about investment. Here you have the bubble prices in Green Mountain Coffee, the collapse all the way down to the price where I quit the short side, $17.80. That was precisely the bottom in July, and then stock rallied 200% or more, in fact. Why? In fact, by far more. Why? But why? Why? Because great part of this move is a short squeeze. And why it is a short squeeze? A short squeeze because that guy, David Hayhorn, he remained short the stock during this process. I mean, it's absolutely, these guys that they are called the great investors of our times, they violate the basic rules, the most basic rules of investing or trading, And, this, I could go through all these examples. For example, Freeport McMoran, a terrific downtrend since you sold the stock at the top. You bought the stock on the collapse in March 2009, and then you sold the stock precisely at the top, I repeat, January 2011, and then since then it has been a downtrend. And this because of my call also in the gold, and this one, in fact, one of the reasons, see, a clear downtrend. And where these guys, they have been calling the bottom almost every single week, and not only here, the same situation in Newmont Mining with a total collapse, $60, where I read news and articles and things calling this company to go to $100 plus, and you have a completely meltdown in the past 2 years in Newmont Mining, because the stock, as I addressed it, you remember this when I addressed it in January 2011, the stock even at $55, it was a sell. Okay, the fact that the stock continued moving up, it was a sell because Freeport McMoran, there it is when you sold the stock. The stock, the fact that continued moving higher, it was even better. You all remember also I addressed this in Rackspace hosting. The Rackspace hosting, it was a sell already at $58 in 2012. I mean, the stock then traded down to 41. That is where I covered the short position. You go to the trading history, it is there. The stock then rallied because of trends in place and momentums. This is created by the Federal Reserve. You had all the interest in this extraordinary rally to a bubble prices in Rackspace hosting, and then precisely at the top I announced, now you sell short the most, and this is one of the best shorts in the market, and the stock collapsed all the way down then to $45, and then you take profits on the stock, and that's it. You are done. You understand? You are do this every single time. And these guys in 2012, they were, upgrading this stock, they continue upgrading, reviewing targets to the upside. I'm going to make you a question. Has anyone told you about that this stock would ever collapse? Of course not. These stocks, they collapse because no one could see that they would collapse, you see, but you had here all the information. This stock is going to collapse, is one of the bubbles. And other reason why Chipotle, that is other stock that rallied significantly, or it bounced, I mean, this stock, you bet on the crash, the $400, 440, all the way down to my target region 239 to 235. That was the bottom when I announced I upgraded the stock Chipotle to buy, and then you have seen a very good rally in Chipotle. But part of this rally in Chipotle is precisely because of the same situation that you saw in Green Mountain Coffee. Is the great investor in the world. The second one, that is David Highhorn. That sounds, I mean, I'm sorry, but my English is very poor, so I have problems pronouncing the names of these animals. The guy was short the stock, and because the guy was short the stock, obviously the stock had to go higher, had to move higher. You understand? So great part of this move, I would say 330 to 300, so far 370 or so, it has been because of extension of the short squeeze based on these individuals, you see. So it helped you to make even more in some of these cases, like in Green Mountain Coffee, where you avoided the squeeze, because I think it was important to avoid the squeeze, to let them capitulate. And same situation in Chipotle, you have to let them capitulate, and then then obviously the stock can one day probably sell off again, you see. But these things are important. You have case studies, live trade calls, instructions, how to trade all these stocks that you see here, since the most speculative play, betting on the collapse, entire collapse. I never told you, in fact, to invest in stocks like Zynga, telling you how to trade since day one stocks like Facebook, also betting on the crash in Facebook and only buying after everyone was selling the stock last year at $18. So covering also the short positions 20. I mean, all those things are important, you see. You had to bet on the collapse, you had to bet on the crash, and only invest after you bet on the crash. And that is very important because you eliminated the risk. And most people, they don't understand this. I mean, what they do is they buy Facebook at 38 because it's going to be the next to Google. And meanwhile, Facebook, the story, is great. All the story about Facebook. Facebook 38, everyone is buying because it's next to Google. And Facebook crashes and they are out. And then you cover the short, you bought Facebook. Understand? This is the way there is only a place where you find all the steps, correct, how to trade, how to invest in Facebook. It is in the service, it is there. And this by the worst, obviously the worst trade in the world. It is Vieira, myself, I'm the worst investor in the world. But the worst investor in the world is very proud because I can confirm and you can confirm and to prove all these stories. And that is the most important, my friends. It's not what it is on CNN or what it is on CNBC or Fox News. It is the facts. The fact that you participated in the Apple crash, you participated in the Apple bull market, this no one can take you out, you see. The fact that you participated in the Yoico crash, the Dang crash, the Facebook crash, before you invested then in those companies, no one can take you out, you understand? Those are the great examples of investing in how, in fact, the principles of investing and not then trading. You see, no one wanted this stock, CarMax, when I upgraded it, I covered the short, I told you to do it, in 2012, precisely this 26.5. No one wanted the CarMax. But CarMax, I told you that in my perspective, it was the single best player in this sector. And CarMax rallied the most to my upside. My target is 48. Stock, it traded to 48, 45 to 48. That is the target region that I gave to you. So then you need suckers, but you are not going then to buy, CarMax at 38 or $40. You bought the most at 26. That is important, you see. That is extremely important because these are the principles of investing in the market. And the same situation with these, for example, the Halliburtons, this great oil service company that everyone, there are now 100 articles about it. I mean, You invested in Halliburton last year at 26. It was precisely the bottom, 26 and a half. There is a live case study about it. I mean, a live trade call, instructions, and I called it also to be one of the best going in 2013. Okay, but then you are not going to buy at $40. You don't need. You already bought at 26 and a half or 28. You know, or $30 in October. There, you see. And the same about the Chinese plays. I've been very clear about this, my friends. Very clear. You know, for example, stocks like Seoul, it was covered at 34. There was only one call here. $34 cover your short, and then buy the stock. And it was there 34. It was in July. It is live, and the stock rallied to 65, 68, and then if you want, you sell to these suckers that they are going then to buy the stock at 65, because then the stock is going to 100 or 200 or 300. But that is not my game. That is the suckers game. That is the guys that now they, you know, the David Highhorn that comes on TV, you know, and spreading rumors that probably this company now is the single best one. And don't forget about this old trading in Sina Corporation here. It is described that there is no place, you know, in the world where, you know, this downgrade at $137 to $140. It was the first time I downgraded the stock, betting on the total collapse, and with a very specific time frame, very specific targets, and, you know, announcing all the bonuses in this stock, every single one, every single pivot, giving to you profits on long side, giving to you profits on the short side. You see, and not only Sina, the most important companies in China is Baidu, that everyone has been, you know, calling for $200, or the main, you know, $200, and the stock, you know, it was downgraded to strong sell, $160 above in 2011, and the stock since then, it has not, you know, you have been wasting your fucking time. I mean, it's like, you know, in Apple, if you have been invested in these companies, obviously if you bought the stock, you know, in 2010, you are still, you know, making a great return, but these stocks were very good buys, you know, a long time ago, you see. So I explain all this, you know, I explain all this with Apple, with Baidu, with the Sina Corporation, with, you know, these great stocks for the crash. Here you had other example, with Credit Suisse and all these Cody Wheelers and calling these great companies in the next, you know, with upside targets $42 and $50 by Credit Suisse. This strong sell, investing on the short side, you make the most all the way down to $13.60. That is the price target I gave to you. So betting on the crash, you had to make the most, and only after you bet on the crash, after you make the most, then you can eventually buy the stock. But before, or in first place, you had to invest for the crash. And not only in this, you have more examples that you discuss in the service, the same situation in Crocs. In Crocs, we have to go back, you know, more than 7 years. Strong sell since $55, $58, the stock, the total meltdown. This stock is a fucking scam. Everyone, Jim Cramer in 2011, Jim Cramer was again in Crocs, the great investor in the world, Jim Cramer, was again calling this stock a buy at 26 to 28, and the stock crashed. You know, in 2011, you search on the internet, the guy that is on CNBC as a program on his own, makes a lot of money by selling, you know, this kind of service to investors in the US, the Americans, and obviously the best, that are the best people to buy this kind of stocks, and they, you know, they crash. And obviously, when you look at, you know, these investors, their performance, and why Americans, they have been, you know, losing a lot of money, while some of our percentage of population becomes richer and richer, this is one of the reasons, is transfer of wealth. You have millions of idiots, of fools on TV that they plug in TV, they turn on TV, and they are listening to these great investors of the world. You know, the David Highhorns, the Jim Rogers in Singapore, the guy that runs from, you know, the US. They let guys run from the US, you know, to Singapore to run from Texas. They let, you know, these great companies of the world, Apple, you know, and Amazon, and so on, to, you know, to run away from Texas too. But they, you know, they sell on TV. While they sell on TV ideas that, you know, Crocs one day, you know, is going to be a great investment, is going to $40, $50, $70, and so on, because everyone, and they don't understand the business model, or do they? I mean, and you have millions of guys on TV, fools, investing in these companies. And don't forget, Crocs, the overnight meltdown last year, more than 40% overnight in one single day. I mean, and you turn rich. And during this process, 2 years in a row, you have seen analysts upgrading, raising targets in Crocs, keep raising, they maintain it by ratings. And what about this one, Aruba Networks? I can go through all of them. Aruba Networks, in the top, I downgraded for the first time, this is a strong sell there, January 2011, $32, strong sell. You had all the upgrades there in Aruba Networks. And the stock melted all the way down to $12.50. You find there the bottom, I call it this bottom in 2012, as well as the recent top in 2013, and again melted down. Are you going to invest in these companies? I mean, are you joking? Are you crazy? I mean, these guys, these Wall Street guys, this is precisely the stock that is then on CNBC. I mean, the Kramer, obviously, the David Highhorns, the Ginger Rogers, and, all these guys. They, or the Mark Fabers, they are going to sell you an idea about the great investment of our times, or, that newsletters like the Motley Fool, that you have, the next stock to make, 4,000%, and things like this. And people, they subscribe, they buy. I mean, they buy, and they have a lot of subscribers, and they lose a lot of money. Yes, they lose a lot of money, and they go bankrupt. But they deserve it. I mean, they deserve. I'm not saying that in some cases they don't. Of course, if I have 400 picks like them, that they say that they follow 400 stocks, I mean, some of them they make money, some of them they lose money. But I'm talking about the great game in the stock market. It is consistency. You have to be able to be consistently profitable. It's not that today I make 1 billion or 1 million or 10,000, and next year or next month I lose 1 billion or 10 million. You understand? You have to be consistent. You have to have a methodology. And that is what I've been following here. You have to have a methodology. It's not that one guy, like David Highhorn, that is all over the place as the great investor of our times. It makes 1 billion or 100 million, and then the next year, he loses 1 billion long gold and long Apple. I mean, it does not make any sense. These guys, they violate, I repeat, the most basic rules of investing. And don't forget about these stocks like scams. Scams is a way. I don't have anything against these companies. This is other example of a bottom in March 2009, when I called the bottom in the market. You had exponential rally in this company that had to crash. So here other downgrade, like in the case in Jupiter Networks, it was precisely all these cases in January 2011. Jupiter Networks, it was precisely the same case. The Aruba Networks, the same situation. It was all related. So here you had also the downgrade between 44 and $38 an half. So all that range, it was already a stock, a strong sell. That is where they call, this again a buy. And the stock collapsed all the way down to the same price as in 2009. And do you think this is So now, listen to this. That great program that everyone is following on TV, that is, I don't remember the name, but there is, they joined like 4 or 6 guys. They call this a great investment at $25 in 2010. A great investment, this company, AKS Steel, commodities, you see, commodity with the steel. And obviously then the stock had to crash. This was one of the top short picks years for years, you see. And the same situation in US Steel, where you have articles from me saying this is one of the best shorts in the market. In 2010, Goldman Sachs, all of them, I repeat, all of them were upgrading this stock. And you had upsides to $90 in US Steel. Where is US Steel today? I mean, you understand? This had to happen, you see. This had to happen. You had to make the most on the short side, and then you buy when no one wants. This is very important. This is extremely important, because what people they do is precisely they they tune to the news, they have the TV, they subscribe, they pay to Reuters, about this real-time news. Now I receive news, and they were buying US Steel, at $50. Okay, as a great investment, US Steel at $50. If the target or upside is 90, I can make a lot of money. Yeah, but you were unlucky because then you had the collapse in US Steel and in steel stocks, right? I mean, and people they invest in the market, they don't even know how to trade, these ETFs. They don't even know. They don't even know how to correlate these, the ETFs. For example, the ETFs, these the Qs, the QID, all of them. For example, the QID, you see these charts. The Aussie market, his ETF is the ITB. So you have the ITB is the Aussie market. The financials, the FIS. This is the financials, the FAZ, and there is a strong correlation between many of the stocks discussed here and these ETFs. And so, for you to understand the process, but obviously this is by the worst trader in the world, the worst, I repeat, the worst of the worst, that is myself, obviously. Here you have information, 100% accurate information about all these companies, where to invest. For example, in Japan, you had a great investment in this company, in Sony Corporation. Also in Nomura that, after betting on the crash, the, $3.70, it was the downside. And then there is also a case study published when to take profits, and it was announced at above $9. It was announced to take profits in Nomura. This is coincident with the recent top in the Japanese market. So I had a clear upside, but it was necessary suckers above $9. Above $9 you need more suckers. You don't find suckers. Of course, the stock was a strong buy or a better buy at $3.70, but it was not a very good buy for obvious reasons at 17, not even at $14. I mean, this is, I think this is easy. I don't see any, you have all the information about these ETFs, and this is the most important, the ETFs, the correlation between, because, investors, they don't know anything about how to trade ETFs, and in the end, because they are unable to correlate the trading in ETFs, all these alerts, 100% accurate, where to buy, how to invest. For example, in Citigroup last year, when you covered also the short position, you remember to $25.26, and then buying Citigroup, then a stock that like Jimmy Rogers, it didn't want. But the stock, after, goes above $50, and they upgrade. Of course, they upgrade at, above $50. They are not going to upgrade at $20. Or the case in Morgan Stanley, that was a great buy at $13.60. It was a great buy at $13.60, But then, you see on the news, after the stock rallies more than 1%, is when they start to appear on the news. Of course, then it comes Jim Cramer, Morgan Stanley now, I think Morgan Stanley is going higher. For example, recently in Citigroup, you have now Jim Cramer, the great investor in the world, saying that Citigroup is a great buy. But where the fuck was the guy, at $26, or in March 2009 when in Citigroup was $1, that in fact is the price where, press split obviously, where I upgraded Citigroup for the first time. You had to bet on the crash, that the financial collapse, the 2008 all the way down to March 2009, and then you bought Citigroup at $1. $1, it was where I upgraded for the first time Citigroup, no risk whatsoever, of course, for 500% return to $50. But now, 500% later, because Citigroup, the reference, the strong buy, it was 1, 500% later, it comes Jim Cramer saying now that Citigroup is a great buy. Of course, and during this process, you also find the great investors in the world on CNBC, CNN, and Fox News, don't forget, while I'm the worst trader in the world wearing sunglasses, t-shirt, shorts, and sport shoes, and on the background I have a pool. that is where the great investors in the world, they are there with their ties, suits, and calling these, for example, he was recommending to sell short financials in the US and buying gold. I mean, this guy, obviously you had to do the opposite. You understand? You had to do the opposite. You do precisely the opposite and you always make money. You see? But you have to know the game that is played in each stock. That is the key. You have to know the game. And so how do you know about the game? How do you know about the game? That is very simple. Everything is here. Everything is here that is on the tape. This is the key. Everything is here. You see, I'm going to show you a tape working live. This is Netflix. Everything is here on the tape. I look at this and I recognize, I see what the stock is going to do. This is a gift that God gave to me. So you have to use that gift. If you don't have that gift, then you have to use some sort of rules that you should use since you don't have that gift. But since I have a gift, I look at prices and I recognize what stocks they are going to do. Then I have a gift and I use that gift to share information with you. But I'm the worst trader in the world because, you know, all I need is this. I don't need any fucking thing else. I don't need high frequency trading. I don't need technical indicators. I don't need books. I don't need anything. I don't need Reuters. I don't need CNBC. I don't need Fox News. I don't need, you know, CNN. I just need this. This is where the truth is the tape, the numbers. This is where, and people, they don't believe this, my friend. Even if I tell the truth, they don't believe because they rather believe in, they prefer to believe in the great investors in the world. That is, again, I repeat, number one, it comes Jim Cramer. Number two, David Highhorn, that I still don't know. I have not learned how to pronounce that fucking name. Sounds like a fucking animal. But number three, Jim Rogers, and so on, Mark Faber, and blah, 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 blah. Some of them living in Singapore, they run from taxes because the fucking in the US they pay a lot. You see, you have to fucking use your brain because God gave you a brain to do something, you know, about it. And it is precisely using the brain that you can do something else different in life, because stock market is one of the most complex subjects in the world, and you don't learn, you know, to trade or to invest in stocks, you know, from books. That is bullshit. I mean, you don't learn, or, you know, these guys are not going to give you free tips. I mean, or, you know, the $1 million by selling a newsletter for, you know, $80 or $20. You are fucking off your mind, man. But people, they believe, they buy, they subscribe, they are there, they are the great, you know, they are the great, the great, this the next Apple, is the next, you know, Microsoft, and so on and so on. I mean, these guys, you know, what do you call these guys? What is this difference? My question is, what is the difference between these guys and Madoff? Madoff is in jail, and these guys, what is the difference? Because I don't, quite frankly, I don't understand the difference. But, you know, but that is me. I'm the worst trader. I'm stupid. You see, I'm fucking proud. I'm happy to be stupid because I'm the fucking worst trader in the world. I'm the worst of the worst. You see, but we have the history there to confirm all the facts, everything that has been said here for years. Quite frankly, I mean, you see, so we have to be happy. We have to be happy because above all, we have the background, we have the solid, the framework, and the other fucking don't have anything. They don't have anything. They are selling ideas. They are on their own games, you see. Then you have scam websites like seekingalpha.com, where, you know, they call the great investments, you know, the OCZ technology, you know, a great company. You should invest because OCZ is going to $10, is, you know, and the frenzy and blah, 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 nye, nye, nye. And then you have a company that in fact should have been delisted already. I mean, this is, you know, and do you remember, I'm going to type here more, MF Global obviously is not going to appear because MF Global is now, you know, penny stock, but you will remember, you have to be proud of calling MF Global down to zero. So I don't even know MF Global, what is the ticker of that? That should be zero. Is zero and nothing else than zero. You see, is zero. It is. I already told you this is worth zero, and people, they don't fucking believe. No, this MF Global is worth more. They kept buying more and more. I mean, you want to see the chart in MF Global, but the guys, they keep buying. They call the bottom every single day, every single week, but this is worth zero. But they don't fucking believe. I mean, they don't fucking believe, and you go, to the case studies, you go to the trading history and you find this is a company worth zero. And this from a guy. The guy in front of this company came from one of the best investment banks in the world. Obviously, one of the best investment banks in the world. That is, which bank I'm talking about? Goldman Sachs. One of the best in the world. This always happens with the best in the world. They are the best in the world, and you have the collapse. You all remember, Bear Stearns, remember the story with Bear Stearns, that obviously if I'm going to type here, the ticker is not going to appear. Bear Stearns, the guy on TV, the CEO, saying no problems whatsoever. You all remember that the stock was trading around $64. And Kramer, our dear friend Kramer, I think it was 58 to 64 as far as I remember. Our dear friend Kramer, the great investor in the world, Bear Stearns is now a fucking good investment. Buy the fucking stock because it cannot fucking fail. Is the best buy in your life. And the stock a few weeks later, $10. And you lose all your money. And where the guy is? Is there. He's on the TV. Yes, they are calling them. Kramer, boya! What? Which is the next fucking stock to buy? Which is the next, Beer Stearns? Tell me, that great investment. I want to know the SodaStream. And the guy, when he tells you the story about SodaStream, is there seated on the share, and he lifts a little bit. Why is it? Because he's farping. He was so fucking drunk about shares with SodaStream at the top 72 that he always remembers SodaStream. So he lifts a little bit of the share, and he has to farp, and he burps and farps. That is the best investor in the world. Is Jim Cramer. He's on TV. And then you have the David Highhorn, and the great investor of our times that, Apple is, you have the best analysts in the world, Jim Monsters, the top pack, research or whatever, in the US, obviously, Apple target 111, that is 1111, because, I call it top pack, and let me know a little bit about that formula, because, I'm fucking interested. I want to know. How is possible. You have to have a secret. 1111. These guys are, they have to know something about it. Something that I don't know. I want to know 1111. It's a miracle. Apple 1111. These guys have to know something that I don't know. And if I don't want to fucking know, because that is all a fucking game, is a scam, you see. And the Apple TV, the iWorld, the iPhone, I don't know what, blah 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 blah. This is all a fucking game, and you have to know about the game before you invest in stocks, before you trade the stocks. So how do you know about the game? The game is here, is on the tape, It is worthless to keep repeating the same, because this is the truth. You don't need to invest more than $15 per month, and you just have to go to nasdaq.com and subscribe. You spend $15 per month in the best tool in the world, that is the tape, and learning about the tape. You see, learning about the tape. It is the single best thing to do. And I had some guys in the service where I recommended to buy this. Now that we are looking at Netflix took over the short at 53. It is there in trading history at 53 and 70 cents. You quit the short side and then you start buying the stock. And they bought the stock, blah blah, and then they quit. And then they wanted me, obviously they paying a very small amount, and they wanted to know where Netflix was going. No, I'm not going to. You are paying what? You think that I'm going to give you $5 million? And some of these guys working for some companies in the banks, you see, and they wanted to pay $4,000 per month for me to tell them that where Netflix was going. Of course, I'm not going to tell you that. I mean, you want to know where Netflix is going, then you fucking sign the contract where you give me or a percentage of all the profits that you are going to make, and you are going to give this information. Otherwise, subscribe to a service called Trading for a Living, and you have there a fixed amount, and you have there all the information that you need. It's very clear. The rules are transparent. They have been always transparent for the past 15 years, you see. So don't try to change what has been transparent, what has been clear, because you are not going to get it, you see. Since I'm the worst in the world, I filter everything. So you get what, and everyone gets the same information, and you can make a lot of money using that information. If one colleague of yours makes $1 million and the other one loses $5,000 in the same stock, there is something wrong. Has to be something very wrong about it, my friends. Because if you didn't make more than $1 million in Netflix, there is something absolutely wrong with you. Absolutely wrong. I mean, if this stock was said to be the single best stock in the market, then back then at 50 to 86, comparing it even in terms of potential return with a stock that I've been discussing here for a very long time, Intuitive Surgical, other extraordinary story that I'm not going also to address here, but is extraordinary story. Then no one wanted Netflix, but Netflix, it was where you had to be, because no one wanted Netflix. They wanted Apple, you see. They want other stocks, man. You don't fucking be in stocks that they want. You have to be where they don't want. And you had all the information. These guys were going to cover, Netflix. All of them were short. So, I mean, it was a game. A game explained here, this process. The bull market, the crash. Don't forget that you participated in the crash in Netflix. To $66 in 2011, live trade call. The rally in Netflix, $130 downgraded to neutral. The crash all the way down again, calling 50 to 86 even before the stock got to that price. Bear in mind. Don't forget about that, because you don't find that anywhere else. Even if before the stock got to 50 to 86, that was my target on Netflix on the downside, and then covering the short, and then you buying the stock, and here you have. I mean, it's simple. But why do you have Netflix today at this price? Because they were bearish there. And they had to cover short positions, and now they stay here. I mean, it's simple. And now, obviously the best investor in the world, Jim Cramer, probably likes Netflix now. And obviously recently, and that is obvious from other guys, it's not only Jim Cramer, they started already saying that, Netflix is going to $300 again. I mean, of course they want to say, they are fucking buying the stock now. Of course they are going to, even in Pandora Media. I already addressed this Pandora Media stock that I recommended other case. You bet on the crash, IPO, all the way down to $7.40, and then this is you invest now in Pandora Media. You cover the short, and you buy the stock. And today, recently, they are upgrading Pandora Media, of course, and you have Pandora Media $18, and they upgraded. Why? Because they bought the stock on earnings. The stock sold off all the way down to 14. And they, of course, they had to put a target, an upside up to, $22. Otherwise, they would lose money. So the retail is buying now, Pandora Media. But you bought the stock there at, $7.30. And after betting on the crash, and the stock was a buy, then after you eliminated risk, is not after, then, you are not going to buy Pandora Media at $18 when you had the opportunity to buy the stock at $7.40, right? You are not going to buy even Pandora Media at $10 when you had the opportunity to buy at $7.40. The rules, the principles were very clear. Here the things are very clear, and people, they later on they are going, do you now recommend to buy Pandora Media at $12? Yeah, you can buy at $12, of course you can. What is the problem? You can, but the stock was a strong buy at $7.40. That's what I call the stock a strong buy. It's not at 12, it's not at 14, it's not at 18 or 20 or to 25. I mean, this is very simple. So you had to use the principles, the position sizing, position sizing, the difference between you make 1 million or 10 million or you lose money, you see. You had to buy the most when I upgrade the stock, when you cover the short positions. You see, so all these stocks were discussed here step by step during years. that is because this is very important. It's very important. You can go through across all these stocks. Tesla, Terra, Nitrogen, Valeros, Liberty, Rackspace, Hosting, blah 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 blah. Everything is here. Zynga, Yandex, and stocks in the US market, stocks in China, stocks in Europe, stocks in like UBS and many others, stocks in Russia like Yandex. Everything is discussed here. I mean, it is here. You see, you don't need anything else. I mean, you don't need anything else. You don't need to invest in one stocks. You can even trade only Apple, and to be profitable, trading just one stock. You need reliable stocks. This is a reliable stock. You see, reliable. You need reliability, and people, they don't even understand the concept of reliability. You see, they don't understand the concept. I mean, a stock reliable. Why do you need to speculate in speculative plays? I mean, very nice, but you should only speculate in speculative plays once you make a lot of money or accumulate very important profits. I mean, by following the rules in reliable stocks, and you should not quit reliable stocks. While a stock does exactly what you expected it is going to do, you should be there. You should only quit if the stock starts behaving differently. I mean, if the stock starts behaving differently, there are rules for everything. There are only two reasons. For example, I tell the worst trader in the world, that is me, Vieira, again I repeat, I tell normally, 1,000 times to people that there are only two reasons to close a position in the market. Two reasons to close a position. And those two reasons are and I'm not going to address. People, they don't, they have problems to if I made a survey and I found people that they gave me 20 reasons to close a position. 20 reasons. There are only two reasons to close a position, and they don't understand this. I mean, this is a simple mathematical truth, and they don't understand. You see, so if you don't understand a simple mathematical truth, so how is supposed that you are going to be able to to be consistently profitable? If you make a question to these guys, the best traders in the world, the best investors in the world, Jim Cramer, the Gene Rogers, the Mark Fabers, the David Highorns, and the Paulsons, and so on, I mean, they don't know the answer. I mean, but they are the best in the world, so I have to be wrong. Of course, I have to be wrong. I mean, of course. I mean, even there was a guy that called here and he said that I was probably paying to testimonials to have those very nice, text and testimonials and reviews. I mean, these guys, they have. The phone is called, is ringing. Can you listen? Maybe this other one saying. I mean, this is amazing. These guys, if I tell the next one to make $1 million, they don't fucking do. They prefer to call, hey, Kramer, hey, blah blah blah. Tell me which is the next soda stream. Soda is now good. Soda stream. And do you remember that case in Riverbed Technology? Don't forget about. You can go through these. Spend here. 1 hour, 2 hours, 3 hours. This guy calling. Colby Willis. Oh, Riverbed Technology. Fuck, it's good. Fusion, excellent. Excellent. Now this was already 3 years ago, and you see. Complete crash meltdown in Riverbed Technology. Where is the guy now? Where is the guy? The guy is fucking selling articles, selling newsletters, and calling this and that. And where is the guy? Disappeared. I mean, do you see this on the internet? No. The Motley Fool, you make a survey and you are going to see Best Buy. You go back a few years and you are going to see, if I'm radically wrong about this, you are going to see the guys calling the Best Buy above $40. Yeah, Best Buy, it was a good buy above $40, my friend. And yes, Best Buy in 2010, 11, 12, and 13, total collapse all the way down to $11 and above. And now, Best Buy, you find, analysts already with targets to $35. It is already worth $35, my friends. But did they tell you that the stock was worth, $35 in January 2013? Of course not. That you had the best trader in the world, the best investor in the world, calling Best Buy a sell. Fucking a sell. The guy called Best Buy a sell. The best trader in the world, that is Jim Cramer, I repeat. He called it a sell. Best Buy at $11 and a half. I mean, that is the fucking very bottom. You see, this is amazing. But, I can keep repeating this. And by the way, just to terminate, because otherwise I can continue for hours. the one of the best scams in the West, a site called seekingalpha.com, where you find plenty of fucking losers, idiots. That is all the retail there as a voice. So but that is a game. You have to know. 99% of people, they don't understand the reason behind that website. They don't understand. They fucking don't use their brain. So if you make a survey about that website, I mean, I'm referring to, for example, using this stock in Best Buy, you are going to find what? You are going to find that a guy writes an article saying that Best Buy within 5 years is worth what? $100. $100. The guy, he has a fucking vision. Is in 10 years, this stock, for example, in 10 years, let's go even back. This is a 10-year shot, but in this stock, in 2004, let's put it in, going back even further. 2002, the stock was $27, okay? $27.30. Today, that is past 10 years, and the stock is at the fucking same price. But now the guy in seekingalpha.com, that is a visionary, we have other candidate for the fucking best trader in the world. We have he believes that, Best Buy, is, by the way, he didn't buy Best Buy at $11 and a half, of course, he's buying the fucking stock probably now. I don't know, and I don't give a shit, but he has a vision. These guys are visionaries in seekingalpha.com. Now he has a vision, and Best Buy is worth $100 within 5 years. Maybe the fucking Fed can buy this stock, or this company can take it to. But does it make sense? Use your fucking brain. You have to learn how to use your brain. Because if you learn how to use your brain, you can see the truth about all these stocks on the tape. This is the tape. You see, the tape tells you the truth and all the truth. This is like the courtroom. Okay, you see here the sentiment. This is the sentiment. Supply and demand. And supply and demand depends on sentiment. Sentiment is very important, and you don't need high frequency trading. You don't need news, Reuters, and to pay and to spend $2,000 or $200 per month, all that. But people know they do the opposite. They spend a lot of money per month subscribing to, instead of thinking about what really matters, that is to have a good broker. One that a good broker, but they are going to have accounts where Charles Schwab, TD Ameritrade, those banks, those brokers that they have no interest whatsoever. This is where they have the fucking accounts, is the retail. Even the professional, but they don't even know how to read this. They look at this and they think, well, what is this? Numbers on left, I don't see anything. Well, of course you don't fucking see anything. Have you ever educated yourself to see something about this? Of course not. Could you ever think that this is in fact where you can see all the truth? Of course not. These guys, they look for the truth where? They put the servers on NASDAQ, they pay $1 million because, they can execute in nanoseconds, and they believe that is, what gives them the advantage. Those are the best traders in the world, the best investors in the world. That they create companies, they sell ideas, they are the best in the world. The multi-fools, the printing service, blah, 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 the next business model, the next, Chinese over and things like that. These guys are completely mad. And you see where this is? This kind of a soap opera. You see, it reminds me of a soap opera, it's the same. Jim Cramer, best trader in the world, is a soap opera. He has a program on TV. But why he has a program on TV? Because he's the best in the world, and we want him. In fact, this David Highorn, in fact, should also have one. They are also invited. They should be there. They are paid, in fact, to be there. Probably. I'm not sure. I don't give a shit. Even if I pay me $1 million, I will not go. You have the G. Rogers, you have the, all of them. But why? They occupied trading? Of course not. They are occupied. They are not. They are fucking trading with their own money. Is other people's money, and they all, and then they are protected by, this. My disclaimer. Yeah, they prepared a very good disclaimer, of course. Disclaimer is very important. Disclaimer, all these companies, channels and blah, blah, they have disclaimers and terms of service and blah, blah, blah. Of course, my friends, all this is a game, and you have better to understand and to learn about the game Because if you don't understand that you are a gambler, and to be a gambler, better than to go to the casino, at least you have fun. You can drink, you have to see some nice girls, dancing. And instead of being gambling and losing money on, in the stock market, that is at least my fucking opinion. Very simple, very direct, and the more you are complicated. I mean, trading is simple. Simple. The rules are simple. They are logical. They have a process. There is a process, step by step. They are logical. There is not a very high complexity behind this. Obviously, market is complex, but the rules per se, they are not complex. The truth is here, my friends. The truth. And you have to obviously to know and to correlate this with external factors like the Federal Reserve, like what the central banks eventually are doing. Obviously, everyone is synchronized to what the central banks are doing. Of course, if today there is a great game in place that is, if the economy, the numbers are bad, that is good for stocks, because stocks have to go higher, they have to rally. I mean, if the economy is bad, the Federal Reserve is going to be there always to help, and they can rally. So buy when the numbers are bad, and of course and you should sell when the numbers are good. I mean, this, and you have all this where in the United States. I mean, but it's not the problem. It's not the United States. It's the mentality, that is the policy that is created, the game created by these guys for years. You see, that has been a game that has been created for years. Since the March 2009 bottom, the game has been this one. You see, it is. If we have very poor numbers in the economy, no jobs, blah, 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 this is very good because stocks have to go higher. The Fed is there. I mean, 80 billion per month, 100 billion. With the Fed can even increase. I mean, 80 billion. We're not 160 billion. We're not 200 billion. Can we even fucking buy more? But if the numbers are really good, I mean, wait a second, because is bad. Is bad because, the Fed is not fucking there. So let's taper. The taper dance, it starts, la ta 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 ta, and everyone starts selling. I mean, where is you will find this? And people complain about Japanese market, or the Russians, or the the Germans, or in France, or no, you have this where in the US. I mean, it's kind of this is a soap opera, my friends. You have this in the number one stock market in the world, and it is the game. So learn how to play the game. And because this is a game, this is nothing else, until the game changes and until the music stops, of course. Until the music stops, because, the music can stop any point, of course. Because, the music and the game is not always the game for years. The game always changes, there are changes. And you have to perceive when it's going to change. Because once it stops, the music, the game, then, my friends, it's better you are out. It's better you are out, my friends, because once the game changes, it's better that the first thing you do is you had made a lot of money, and then you are out. Because once the game terminates, once the game changes, I repeat, you have to learn about what is the game, the next one to play with, you understand? And then you have the key, and you have the key always to make consistent profits in the stock market. But, if you believe that, the key is to follow the advice of the best investors in the world, David Highhorn, number 2, Jim Cramer, number 1, Jim Rogers, number 3, and Mark Faber, number 4, and I would say, of course, I could put on the list also Cody Williams, number 2.5, and then, my friends, I obviously wish you very good luck, and that is, try to do something, try to learn about stock market, try to do something about it, and in fact you can make a lot of money, but you have to be prepared also to lose money, because those that are not, they don't know anything about stock market, you are not going to this is not like, you don't go from primary school to university just like that. You have to go through different steps. People, they believe in miracles. There are no fucking miracles, my friends. Don't believe in fucking miracles. There are no miracles. And people, So, Kramer, good luck with SodaStream, good luck with Cree, and all those stocks that you really like today. because we are on you. I mean, we are following. I'm following. I mean, I'm not then, at night I'm not following you. Someone is calling you probably to, Kramer, today, what do you think? Research in motion. You remember the research in motion, 125 is going higher. Research in motion is competitive advantage. No, not even Nokia, not even, nothing compares to. Of course, I mean, research in motion, now it is BlackBerry. They fucking forgot the name. I mean, it's 10, single digits. Do you remember? Everyone, someone called ever, has anyone ever called, research in motion down to single digits? I mean, of course, no. But, I called it, but I'm the worst trader in the world. This is the stock that is now BlackBerry. A complete, I mean, are you going to invest in this company? I wish you good luck. I wish you good luck, my friends. But, buy. It's maybe one day you can be again, the gate research in motion at $50, at $100, and then again you have the Kramer, Jim Kramer, the great investor in the world likes BlackBerry again. That is the new BlackBerry, you see. And they have to change, they may have to make these, but you have to go through all the history in BlackBerry to know how to trade, how to invest in these companies, because how to invest in these companies was like how to invest in Sears Holdings, a great short, my friends. Can go through all these companies, one of the best shorts in the market, This company, BlackBerry, same situation. BlackBerry, that is, BlackBerry, they changed it, so the ticker is this one. You see the total collapse, but there, my friend, bull market, and they never go down. Well, these are tech companies, my friend. Tech companies don't know fucking miracles. It goes from $5 to 150. The limit is the sky, and they say always, shorts. Where is shorts? Shorts, they lost all their money. Are you sure that shorts they lost their money? Because it appears to me that what happened is that longs, bulls, they lost all their money, my friends. It's precisely the opposite. So, good luck. Thank you.